Hi guys, it's your boy Nice Henry from Millionaires FX again. I want to welcome you to another episode. I have another video for you. And today we're going to be looking at a lot of stuff. But before we get started, I want to drop a quick disclaimer. This is not a financial advice. This video is clearly for educational purposes only. Do not consider it as a financial advice. Trading forex can be very risky, so do make sure you do your due diligence before you invest your money. So because you can lose all your money to the market, so make sure you do your due diligence. So I also want to welcome you to this video, and if you have not subscribed to our channel, I want you to subscribe to our channel. I want you to also join our free Telegram group. The link is in the description below. I also want you to join our free Discord group. The link is also going to be on the description below. So I also want to encourage you to give a thumbs up if you find this video very interesting. Make sure you leave a like, make sure you drop a comment, ask me something you want to know. I'm gonna find time to answer you. So right now, let's get right into it. But right now, first of all, we're going to do a quick review of the trades that we took this week, what the week was like, what we did, and so what we did and the trades we took, the ones, how it went. I'm going to do a quick recap. So I'm starting with gold. This is gold. We started on Monday with a very strong momentum to the upside on Monday. Before we woke up from my time, the market have already pushed up. So when I saw that the market have already done a lot of movement while we were sleeping and early hours of the morning, I didn't bother taking a trade because I knew that because of this higher time frame support right here, it was practically impossible for them to break below that level. So but however, if I wanted to take a trade, I would have found a short scalp there, but I didn't want to take a trade because I knew it was not worth it. So I had to walk away. So but on Tuesday was the shocker. When we woke up on Tuesday, we saw the market open near the low of yesterday. Then, but I know that this is not really the market opened at the middle of yesterday. This is yesterday's low and yesterday's high. So the market opened at the middle, and then I took this trade, this short scalp, and I was targeting the high of Monday's high. I was targeting Monday's high. So the trade was working pretty good. The trade was okay. It started working its way up. So we took profits when it started to consolidate. And then guess what? Because of the news, the market flew like hell. But I would have gotten that trade. I would have followed that huge move to the downside. The reason why I did not follow the move to the downside was because the market did not come back to yesterday's high. I was expecting it to come back to yesterday's high and form this M pattern and then fall down. So but it didn't happen. When it didn't happen, I had to change my mind. I didn't take the trades and it fell very nicely. I knew it was going to fall, but because it didn't play my setup, I didn't get what I want to see in the market, I didn't bother to take a trade. So that's it. So I already made some money from the market, from the initial move, so I was fine. You can't get every move, so I had to let it go. So on Tuesday, the market opened near the low. On Wednesday, the market opened near the low of Tuesday and started to consolidated for a very long time. And then when I saw the channel, I was waiting for it to break out, and when it broke out of this channel, I took this nice trade, but I took my profit at TP1 because I was going to bed. I was very tired. I had to get some rest. But after I took my profit, the market fell all night. All night. Fell all night. And in the morning when I woke up, I discovered the move was still, the market was still bearish. And then it started the consolidation again. And at this point, I drew a box. And when I saw the price action, you can see the price action here. Look at that pin. Look at that pin showing a rejection. If you look at that pin there showing a heavy rejection, and then there was another pin to the downside also because of the higher time frame support. So but I knew that, okay, because of the price action I was seeing, I knew that we were going to see a bearish move. So because of that, it was a mixed feeling really. So I didn't really rush to take any trades. I just calmed down. I was watching the market and it started to fall nicely. It fell without me taking the trades. I knew what was going to happen, but I didn't take the trade because I had some other good moves, better moves on other pairs. So you can't get everything, And then on Friday, the market was consolidating inside this, open near the low of Thursday, and it was consolidating. After it left the triangle, it went into this rising channel. So when I was waiting for that breakout, and you see the trick they played, it broke out to the downside, giving you the impression that it was going down. Maybe it was bearish. I know a lot of people would have got caught up here. So but I didn't rush to take the trade because I didn't see a strong price action. Okay guys, and then there was no reference point for me to want to connect this level. So it would be foolish for me to take a trade blindly, just get into this trade blindly and just sell just like that. No, I like to find a reference point. You know me, I don't joke with the levels. So then the market broke back up during the news, and I caught this short scalp. I couldn't call this on the news because it happened so fast. I just had to take the trade. So this one was Nasdaq on Monday. We had this short scalp. The market had been in a weak trend throughout the previous week, and on Monday the trend continued. But guess what happened on Tuesday? Consolidation, peak formation. I actually told them on the live session in the inner circle that we're going to see this market stop hunt people to the upside, and then we're going to see that fall. And exactly what I told them was what's happened. But I didn't take the trade. So, but on Wednesday it was through only consolidation, so I didn't take a trade. But on Thursday we caught this nice. The market went back to yesterday's high. Peak consolidation, peak formation, and the market fell and gave us a nice 1:7 risk to reward ratio trade there. And on Friday I did this short scalp. This was the only trade I was able to get on Nasdaq when I saw the M pattern, and then I had to take that short scalp and I took my profit somewhere there. I didn't call out this trade because it happened so fast. It was after the news, so I just wanted to get something. So look at this one on Euro USD. On Monday the market opened, and then I was watching the market because I had too many trades. I couldn't take all of them, but I already marked up this level after I formed an M pattern and fell. The next day I knew that this market would go back there because of the trend line, the higher time frame trend line. I see the trend line, so because of the trend line I knew the market was going to go back there. So I marked up this level, and you can see how the market respected it. And the double confirmation was that place was also the previous day high, so it was Monday's high also. So it was a double confirmation. The market fell nicely from there. You can see the trade, it was a nice one. So then the next day the market came, or that was on Wednesday, the market fell nicely after the consolidation. It couldn't break the resistance, so I knew that we were going to see a sell. So we took that sell on Wednesday, and then on Thursday was when we got our loss. That was when we took our loss on Euro USD. So I need to show you this trade. The market went back again to the high. Okay, guys, it went back again to the high. So when it went back to the high, because of this squeeze, I knew that this was all liquidity grab and the market was going to grab this liquidity. So I thought it was going to happen immediately. So immediately I saw the pin bar, I saw the price action pin bar. I took this sell and I targeted this level and I went to bed. I placed this trade and I went to bed. I dozed off while I was waiting for the trade to happen. Guess what? The market went back up and stopped us out. And then in the morning, when I came down and I saw it, I saw this the price action. I saw this engulfer. When I was watching the market, I saw this engulf. I knew the market was going to fall, so I started marking up the levels. I was marking up the level, and when I saw that it had broken this level, I had interest. I had my interest at this level. Sorry, guys. I had my interest at this level. I was targeting this level. So immediately it broke this level. That was my entry, and we got that nice trade, and the market gave us a nice we targeted 1:6.4, but we did like 1:3. So but what happened was that the market formed an M pattern and pulled back. I wanted to get that reversal trade. We got that reversal trade, but later the market pulled back. When we saw the M pattern, I had to close out my position and walk out of the market so I don't get caught up. So but these GBPJPY on Monday gave us a bad trade. It was consolidating. It formed this high on Monday, and on Tuesday it was consolidating all through the high, and I was expecting the market to fall that day. Guess what? The market refused to fall. So I had a lot of positions in this market waiting for that fall, because I have already seen that if you check from Monday, we have started on Friday to rise. You know, the market have been rising, one push, two push, three push, peak formation. I was expecting the fall to happen. This is our weekly template. Started on Friday, so I was waiting for the market to fall. The market did not fall. Guess what? The market did not fall. It kept us there, and I had to close my trades and take my small loss and walk away. So the next day, I think the market spiked up and kicked us out because of the news. I thought it was going to fall when the news started, but look at that crazy spike to the upside. It spiked up and stopped us out, and still I got in the second time because I was sure the market refused to go down. You know, after everything, the market refused to go down, so we had to take our losses like that. I had positions because I knew it was a dead giveaway. The market was going to fall, so I thought during the news the market was going to fall, but it spiked up and kicked us out of the market. And then the second time I took another sell again. It refused to happen. I left it. But on Thursday we got this nice trade. On Thursday, look at it. The market pulled back. The next day the market created this fell. It fell when before I woke up, the market had already fallen. So I saw it. I knew it was going to happen. So but it's one of those things we see in the market. So the next day the market opened. You can see the market opened, and then it walked its way back to the previous swing point. This is the swing point from London session. So he used the swing point as reference. So I already had it marked. You can see I already had it marked. I was waiting for it to. It was a trend continuation trade, so I knew the move is going to continue. So immediately the market went back there. I took that sell, and the market fell nicely, and we got that 1:4.14 risk to reward ratio. And the next day we also caught this one again. When it broke out, it formed like this one. This is an M pattern, but you don't really notice it. So but we caught that nice move on Friday, and that was all the trade we took. And on gold, okay, we already did something on gold. So basically that was all the trade we took, and I was skeptical to take a lot of trades during the week because I wasn't really sure of the direction of the market. I wasn't really sure. I wasn't 100% sure. because the market was crazy. The bearish momentum was crazy. I was very skeptical to take a trade on Monday. I was just looking at the market because after that crazy move on Tuesday, I didn't know if we were going to see an immediate reversal or the fall was going to continue. So, but when I had a grasp on it, was on Thursday. That was when I started executing trades like crazy, and I was killing a lot of trades. You see, what we've done in Millionaires FX is that we've tried to simplify trading. And today we're going to talk about the opening price. Yesterday's opening price. I've already told traders that what we have done in Millionaires FX is to simplify trading. Seriously, people thought that trading was so difficult, it was impossible to win trade every day in the market. But we have actually proved people otherwise. What we've done in Millionaires FX is that we've simplified trading and we've redefined trading. We've simplified it. Now, I always talk about the three things that we are looking for in the market. We are looking for 1, 2, 3 pushes, peak formation, and crash. We are looking for the 3-day setup. That's the weekly setup where the market rises on Monday and Tuesday, goes into consolidation by Wednesday, Thursday you see that fall, or consolidate up to Thursday, and by Friday you see that fall. And then we are also looking for pump and dump. So these are the things that we're looking for in the market. And we also consider the higher time frame bias. Also, we look at the 4 hours. You understand? So, but basically, for my analysis, I normally use the 4 hours on the higher time frame to have the higher time frame bias, and then for my day trading, I do my analysis on the 15 minutes, and then I scale it down to maybe the 5 minutes sometimes to take my trades. I like to focus on the time frame where I can master. I have already mastered the 15 minutes time frame, and I use it to the best of my ability. I know absolutely everything that is happening in the market. Nothing happens without my knowledge. So because I've mastered how to read the charts on the 15 minutes and the 4 hours, so I don't want too many noise. I don't bother to go to the too many time frames to begin to look for what's not there. I know what I'm looking for in the market. I already told you guys what moves the market is the levels. You need to pay attention to the levels. I already told you guys, see the way all the trades that I execute are very clean. You just respect the levels like it's like crazy. You just respect the level like crazy. Nothing happens in the market. Nothing is a coincidence in the market. Everything is well calculated. You just need to understand the levels they are working with. So let me walk you through the process of opening price and how you can use it to your advantage. Let's use the GBP JPY. For instance, you can see the weekly template started on Friday. The market started to rise on Friday. Peak formation Friday, Monday rise, peak formation Monday, Tuesday, Wednesday the market crashed, and on Thursday the fall continued because it has to go back. It was trying to go back to where the move started from. So when I saw this move, I knew it was a continuation trade. I just waited for it to pull back to the place where the move started from, and when it pulled back, I waited for it to pull back into one of the swing points. This was a dead giveaway trade, and I took that trade. And then I'm going to show you something interesting. Look at this point here. Look at this point here. Look at this point here. Look at this level here. This is the previous. This is the previous day high. This is Monday, Tuesday. This is Wednesday. On Wednesday, I was looking for a trend continuation to go down, continue the move to the downside. Now, what happened? The market opened at the middle. This was the low of the day. When the market opened, it worked its way to the low of Tuesday, and then it formed a W pattern. You could have taken a sell here and target the high, the swing point. And even maybe the high sometimes. But what happened? It worked its way to this level, and then it formed an M pattern on the 5 minutes. It wasn't clear on the 15 minutes, but it formed an M pattern on the 5 minutes. Let me show you guys. Look at it. So when I saw the M pattern, I marked my level where I'm getting in. You can see the price action. Can you see the M pattern very clear with the price action? Look at that pin, 3 pins rejecting price to the upside. And after that, what happened was a dead giveaway. It felt like crazy. This was where I took my first profit, my TP1. It was where we took our first profit. Look, immediately we got here, I took my partial profit, and the market continued down. So this is pure trading. This is clean trading. We are using the levels because we know that these levels, they work. The levels work. So when I didn't see the M pattern clear on the 15 minute, look at it how clear it was on the 5 minutes, and that was my entry. You can see my entry when it pulled back and it was rejecting that pin. I took that trade there. Look at it like a sniper with a sniper entry. So guys, you can trade like this. You can trade like this. Okay, you can trade like this. So you can trade like this. And on the next day again, when the market opened, it opened near the low. It opened near the low. And when it opened, what I'm watching is it going to be able to break this level? Yes, it broke this level. Immediately it broke the level. I saw an M pattern again somewhere here. M pattern again. Bearish engulfer, dead giveaway, price action. I got into that trade and I killed it again. So guys, we have simplified trading. All these people, they make it very difficult for you to be able to understand what's happening in the market. I'm not trying to give you some kind of pull some fib or give you some kind of bullshit. No, I'm telling you what works in the market. I'm telling you what works. This is what is moving the market. This is what is moving price. Forget about all the garbages you're learning. They're telling you, oh, look at that level. Oh, we are looking at the... I don't look at shit. I know what's happening in the market. I understand what's happening in the market. Okay, I just need to draw the levels and I need to wait for the market to come to me, do what I want it to do, and then I take that trade. Look at it again. Pump and dump. Look at it. Look at how they pump the market. Okay, and then all I had to do was to back up my level. This was on Nasdaq. This was on Nasdaq. That was on Wednesday, and that was on Thursday. This is the level. This was the high from the previous day high, and look at how it went into this high. Remember the video I did about the fake breakout. This was a fake breakout. They didn't really want to break out, but they just want to trap traders on this side, and then the market fell back in. Look at what happened there. Immediately they consolidated the market above and breakout test trader. A lot of people are buying this market and believing that the market is going to continue up. What I did was to wait for that breakout to happen, and the breakout happened, and look at how nice that trade was. Pump and dump, easy. It took out all the previous swing points. All the swing point was taken out immediately within a couple of seconds. I think we just three candles, everything was taken out. Okay, everything was taken out, and that was a nice one. We just took profit and walk away. So guys, this is very easy. Trading is simple. Okay, trading is simple. You just need to know what you're doing in the market. So guys, I hope you learned something from this video. Also, before I go, I want to give you one little secret again. Whenever the market opens from the high of yesterday, open near the high of yesterday on the current day, if the market opens near the high of the previous day, expect a fall. If the market opens near the low of the previous day, expect a bullish movement that day. If the market opens from the middle, it is going to either walk its way to the high of the previous day and fall, or walk its way to the low of the previous day and rise from there. So note these things, put it in your trading. The market is only going to do one thing. It's only going to open near the high of yesterday, near the low of yesterday, or in the middle. If it opens in the middle, it will work its way to the high of yesterday and fall from there. It's gonna, if it opens or you walk your way to the low and then give you a W pattern and rise from there, or it is going to open from the high and fall all day from there, or it's going to open from the low and rise all day from there. Pay attention to this, put it in your trading, and you will see the tremendous difference it's going to make in your trading. I'll see you on the next video, guys. Let's go back into the charts, back test these things, and you're going to see it in the charts. You can join us on Discord. Like, once again, join us on Telegram. We have a free channel where we share free signals for traders who are trading, and our signals are so far accurate. You can join us. If you want to be a part of our inner circle, kindly DM me. If you want to be a part of the inner circle, DM me. I can coach you one-on-one, teach you how to trade. I've been coaching a lot of traders on how to trade, and the result has been so amazing. You can join us. I'll see you on the next video, guys. Have a wonderful week. Bye bye.